Hey there. Welcome aboard. It's Walter here, and you're here at the Naked Trading webinar. Welcome. It's great to have you here, guys. So let's rock and roll. Are we all good to go, Adinda? Today we're going to talk about naked trading reversals. Just want to make sure that everyone can hear me okay and everything's coming through. There was something wrong with the microphone earlier, but I think it's okay. Cool. All right. So we're going to talk about naked trading reversals today. My name is Walter. I wrote the book Naked Forex, full-time trader, been trading currency specifically since 2000. And what we're going to do here today is we're going to talk about methods that you may want to test yourself for finding those reversals on the chart. So the first thing I want to point out is that I like to use a little handy dandy, let me zoom in so you can see it, not zoom out, zoom in. My little strength of trend indicator is the open position ratios. Now you'll find those lots of places. If you look for open position ratios, you'll find them. I think they have them at like MyFXBook and stuff. I don't like those because MyFXBook and websites like that, they tend to attract good traders. So I like to look at those that are at that are more like the general traders, like newbies, you know. And open positions is different to sentiment. What I look for is where are the trades right now. So for example, right now you can see that 69% of the traders are short the pound yen. So I want to be in the 31% that are long. Same thing here. Actually, the EUROCAD, I'm in this trade. I am one of the 18% of the traders that is short the EUROCAD and has been for many days, whereas 82% of these traders are going long. Now, these data come from the IG markets data. You can find these by simply, Saxo Bank has some, but you can also go to open position ratios, IG markets, and just go with, actually you don't even have to type IG markets. You can type the currency pair, like the EUROCAD, and as you can see here, 82% of the traders are currently long this market. We're looking at the same chart, but they're looking at this chart and thinking, I want to buy. I am literally going against 82% of these traders at IG markets because I want to sell, right? So I use this as a proxy for trend strength. Now, why is that important? Because what I want to share with you here today, we're going to talk about several different types of reversal setups, naked trading reversal setups. But what I'm going to share with you today is that you can kind of trick yourself into trading reversals, because I know most traders, I know because I've surveyed traders around the world, a lot of traders love to look at the charts and say, where can I find the turning point? I want to find the turning point. If the market's going up, I want to sell. If the market's going down, I want to buy, because these, let's face it, these spots on the chart right here, they're super sexy. And your eye is sort of drawn to the spots on the chart where the market reverses, right? And so when I first started trading, I was the same way. I wanted to buy when the market was falling because I wanted to catch this counter move, and when it was going up, I wanted to sell because I wanted to catch the move down. Now the problem is these traders, they're selling here, they're selling here, and they're selling here, right? Before it actually does fall here, you know what I mean? So sometimes you get into trouble. And also right here, in fact, you can see in the open position ratios, they're buying here, and then it goes a little bit in their favor and they get out. So they make these little tiny profits on the retracement moves. And the reason why I'm bringing this all up is because I think it's really important to try and trick yourself into thinking that you're trading a reversal even though you're going with the trend. It's actually easier, I believe, to trade with the trend. And if you're a reversal-minded trader, what you can do is trade the reversal of the counter trend move. So for example, the pound yen right now has been going up, but I anticipate that probably sometime relatively soon, we're going to see a pullback. Now, I'm not sure if that pullback is going to happen like something like this, where it just kind of follows this little blue trend line, or if it goes all the way down, like I have my orange lines drawn here, and bounces off the top of these highs over here, right? That back in July. So I'm not sure if it's going to get all the way down to there, but if it does get all the way down to there, this would be the perfect spot to trade a reversal. What might a reversal look like? Well, my two favorite types of reversals are the big shadow. Well, I'll share three with you. So at least three. Maybe we can get to more if we have the time. But I like to trade big shadow reversals. So this is a big shadow reversal right here. A big shadow reversal has a couple of very simple characteristics. And those characteristics are that it's the biggest candle we've seen in a while. Okay? Usually in the last 6 candles, the last 10 candles, depending on how restrictive you want to be. But I like to see the largest range in X candles. And X can, like I said, X can equal 6 or X can equal 10. It doesn't really matter. The point is you want to have the largest range in X candles, and that's what we have right here, right, on this big shadow. The other thing we want to see, actually I'll share with you another one in a minute before I forget. There's another one that happened the other day. I think it was yesterday. These are 8-hour candles, by the way. The second thing we want to see is we want to see room or space to the left. Okay, now the only way that these reversals, the best reversals you're going to find on the charts, have this space. Okay, so it's a 2-candle formation, the big shadow, but the 2 candles should have some room to the left where you don't see any recent market action, and that's the case here. It's been, since this 2-candle big shadow formation formed, the last time we saw market touch this was 28 candles ago, 27 candles ago. 27 candles ago, the market actually hit this same level. So it was a while, right? And those are the best reversals, where you see the market hasn't been there in a while. Now, if there was a reversal down here, obviously because it's a with the trend sort of reversal, and it's a reversal on a at the end of a pullback move, you're not going to have that. This rule here is not going to apply that much, right? You're not going to see a whole lot of space on reversals of counter trend moves. That's just the nature of the game. But if you're trading a straight up reversal, then you're going to see a lot of space. Okay, here's another big shadow right here, but I wouldn't say that this one was as good as this one because of the fact that this candle, I think, is actually, let's just see which candle has a wider range. Maybe I'm wrong, but I don't think so. So 141 pips on that one, and this one is, oh, it is. So this candle is bigger than the big one there. So it's bigger than 1, 2, 3, 4, 5, 6. Yeah. So it is the biggest candle we've seen in the last 6. And there is a little bit of space here before you see where the double bottom sort of look was over here. So you've got room to left. Now the big shadow candle, the one that I've identified here with the blue arrow, that one has to have a higher high and a higher low. Okay. A higher high and a lower low. So it has to completely engulf the prior candle. Now, I'm not talking about bodies here. I'm talking about the entire candle. Also, we want to see it close. For a bearish one, we want to see it close down near the low. For a bullish one, we want to see it close near the high. That's another reason why this one isn't quite as good, really. I really would have liked to have seen this close a little bit higher up near the high than it was here. It kind of pulled back a bit, which is a bit scary to me. You want to see the close near the extreme. So if it's a bullish candle, a close near the high. If it's a bearish candle, close near the low. Close near extremes. Okay? And then the next thing we want to say is that the next thing we want to say here is that the market goes within the next 2 candles. So market takes out the high or low within next 2 candles. So within the next 2 candles, if I had a sell stop below my bearish big shadow, it should be taken out. And that's the case here. It was actually taken out the very next candle. So a little sell stop there. The stop loss goes up above the high. Sell stop goes down near the low, and you're off to the races. Number 6 is my stop on the high or the low, right? Depending on if it's a bullish or a bearish one. So this making sense? This is really a special case of the engulfing candle. That's really what the big shadow is. It's a special case of the engulfing candle. That's all it really is. Now, I'll share with you one that we had yesterday on the 8-hour charts here. No, it wasn't the CAD Swiss. Was it the Aussie CAD? Yeah, no. It wasn't the Aussie CAD either. Which one was it? Was it, hang on, I got to look at my numbers just to remind myself. Hey, Robert. Good to see you. Hey, Kath. Brian's here. Sunil's here. Hey, guys. I just saw your messages. Okay. There's actually a really good example of this, but I need to find it. Aussie CAD. It was a bearish one. Oh, it might have been, actually, it might have been, no, it wasn't the loonie. I don't think it was the loonie either. Let's have a look. Maybe it was the pound CAD. No, I can't remember. Pound CAD, the pullback, this is a great spot for reversal. I love this 1.7030 level for a reversal. Again, a big shadow right here would just be wonderful. But let's take a look at the one that I'm trying to find here. There it is. It's the euro pound. Okay. All right. So here's the story on the euro pound. Story is euro pound numbers are really good. 80% long, 20% short. Definitely a bearish market, right? And more importantly, the chart confirms it, right? If the numbers are bearish but the chart looks neutral or, you know, bullish, I'm not going to trade it. But if it all lines up like this one does, we actually had a beautiful big shadow yesterday. It engulfed the prior candle, has a higher high, a lower low, closed down near the low. It's the biggest candle we've seen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, I don't know. Since this one? Like, that was a while ago. That was 22 candles ago that we saw a candle larger than the one. But guess what? It didn't take out the low. See, that's the issue. It didn't take out the low. So that was, for me, that was the real bummer, that we didn't take out that low. I guess maybe the current candle will, but look, candle 1 had a chance to take out the low. Candle 2 had a chance to take out the low, and they didn't. So this seems like the market might be stuck here before it actually falls down to 84.50. Certainly, I think it is going to fall to 84.50 before it goes to, say, up here. But, you know, whenever this happens, it suggests that maybe the market's not quite ready. Although that candle suggests that the market's ready to go now, it wasn't. So I can't really take that trade right now. I don't think it's double bottoming here. I don't think it's going to zip up here. I do think it's going to fall here, but maybe it has to swing up a little bit before it does. Maybe it just needs to flatline and go up, you know, sideways for a while. I don't know. But it didn't fit the big shadow rule, so it didn't really work. All right, so this one is also not a big shadow. I'll talk about this. Some people, you know, they focus on the bodies of the candle. So in this case, the body engulfed the prior body here, but it wasn't a big shadow because it didn't have a higher high. So our sell candle here, the second candle, the bigger one, it did engulf the body, but it closed down to the low. Everything looks great. It's got space. The last time the market was here was way over here, you know, which is nice to see that you're, you know, at an area where you find some resistance and all that. But and it went in 2 candles. All that happened, but it didn't have a higher high, so it doesn't quite qualify, unfortunately. All right, so that's the big shadow. Any questions about any of this stuff? Is this all making sense? I don't want to go too fast, but if this is something that maybe you've read the Naked Forex book and you know about big shadows or whatever. All right, let's talk about another one. So another one that we want to talk about here is the Kangaroo Tail reversal, and then we're going to talk about one that doesn't get a whole lot of pub. So the Kangaroo Tail reversal is where actually see how this pulled back here and bounced off this level right here. This is kind of what I'm looking for on the pound yen. Actually, all those pairs, the CAD yen, the pound yen, all of them are kind of similar, where this is going to break this level, and then I want to see it spend some time up here, come back down, and bounce off my 91.17 level. So that's what happened here on the 4-hour oil chart. This is West Texas crude. You can see it broke above this high here, spent some time up here, pulled back, and bounced right there. Now, this wasn't a kangaroo tail because the open and the close were not inside the prior candle's range. The close was too low to be in the prior candle's range, and the prior candle was actually very small. Let's see if we can find some kangaroo tail reversals here for you. There's one right there. So we want to print on a support and resistance level. We want to see, which big shadows, obviously, you want them to print on levels too, support resistance level. You print, so the kangaroo tail prints on a support resistance level. You have a really nice long wick. So the open and the close have to be in the top third for a bullish kangaroo tail like this one, or in the bottom third of the candle for a bearish one. So open and close on the top third. In the top third, I should say. Obviously, it's bottom third. It's the opposite, bottom third for bearish ones. Then you want to have some space or some room to the left, which we certainly have on this one. And we could look for some live ones, actually. We could go and look at the 1-hour charts and see if we can find some live ones right now. There's one right there. You can see it's got nice space. And then we want to see the market takes out the high within 2 candles. So again, you put a buy stop above the high, it takes out the high. Stop loss goes down below the low, and you're off to the races. So this is a great way to trade reversals. So let's go ahead and stop below low. Targets can be support resistance levels. In this case, you had a nice one right here. Right here, these lows. Right here, that was a nice target right there. The open and close are in the top third. The open and the close must also be within the previous candle's range. The reason why we do that, a lot of people actually ask about this, and let's talk about this. Open and close inside previous candle's range. So what that means is, let me see if I can, there's a kangaroo tail. So does anyone know what was wrong with this one right here? Because people say, well, what about this one? Walter, hey, how come you didn't take, what's going on? This is one right here. What's wrong with this one? Who knows what's wrong with this one? Why is this one no bueno? This kangaroo tail. Prints on a level. It's got support over here. We're on a support resistance level. Tick. Open and close on the top third. Tick. The market takes out the high within 2 candles. False. Candle 1 doesn't take. So if I have a little buy stop right above this candle, like 3 pips above my kangaroo tail here, guess what? It's not taken out, is it? Candle 1, candle 2, don't take it out. By the way, if you ever see candles close in the belly of a kangaroo tail, that's usually going to be a busted kangaroo tail. Normally, you will see the candles go within 2 candles if it's, if the market's going to go. And if it starts closing, you see closes down here in the middle of the, the 50% mark or lower. That is usually a sign that it's game over. It's time. There's nothing to see here. Keep moving. You could trade the busted kangaroo tail though, which is a totally different way to trade, but certainly that's the case. So here's the one right here, no space, right? So that's the problem with this one is you have no space. Now this is what we would call a trendy kangaroo tail, where you have a box consolidation to the left, and then you get the trendy kangaroo tail. But we're talking about reversals here. Here's another one. Again, this one's a bit weird. It might fit into a trendy kangaroo tail, but it would be a little bit hard to even make that case, I think. So here's another one. So I was going to tell you about the reason why we have that rule, which is that the open and the close have to be inside the previous candle's range. That's because in a runaway market, that'll keep you out of a runaway market. If you're not using something like open position ratios, that will keep you out of a runaway market. Because, actually, let's go to the Bitcoins. Let's have a look at them Bitcoins and see if we can find examples of this. This is usually a pretty good market to see that. We'll go to the 1 hour. So in the Bitcoins here, we are looking at potentially, let's see. When you're in a runaway market, you'll get the kangaroo tails, but they won't necessarily close in, where you, so here's an example right here. August 6th, okay. So do you see this one right here? This is a kangaroo tail, right? But it didn't close inside the previous candle's range. And oftentimes the reason why that happens is the previous candle is so small, right? But that's not the case here. The previous candle is massive. In fact, it's even bigger than your kangaroo tail, which is not a really good sign. You want your kangaroo tail to look pretty domineering, right? You don't want it to be a little guy. So unfortunately, this one closes above the high, so it's not inside the previous candle's range. And guess what? Next candle, it takes out where the stop loss would have been anyway. So that was a clue that this was a runaway market. So this, however, is a much more likely double bottom because we already have established this low over here, which is where the tail is. The tail is much lower, so it clears out all the orders that were down here. This is a great setup right here, right? It's a great setup. So yeah, so when you're in a runaway market, when the market's really trending, which to be fair, probably we'd have to go back to June and May to see that, you will get some kangaroo tails, but they're going to be no good because a lot of them are going to not have that rule. They're not going to have that rule satisfied, which is the open and close inside the previous candle's range. Brian says, James, you can watch the video in the section. Yeah. All right. So, all right, cool. All right. So I just wanted to share that with you. I think we're all good with the kangaroo tails. Again, it's in the Naked Forex book if you've read it. If not, there's your rules right there. Now you can rewind and freeze that frame if you want on those rules. Now, what I want to talk about now is more exciting. Thanks, Robert. Which is this idea of a rhino trade. Now, if I ever write another book on trading systems, I've written 3 other books besides Naked Forex on risk management, trading psychology. But if I wrote another book on trade setups, I would include this one because it's not in. Didn't make it into the book, but I think it's definitely worthy of a chapter, right? And let me see if we can find an example of this for you. Dun, dun, dun. There's our big shadow rules. Wait, did I see one on oil? Let's have a look. I know I just saw one earlier. Oh, yes, here it is. It's the oil one. Okay. All right. So this is kind of a fun one. Okay. Now, if you've seen videos we've done in the past on the squeeze play, this is not a squeeze play. Okay. This is something totally different. And if you're familiar with squeeze play, again, if I ever wrote a book on naked trading setups, I would definitely include a chapter on squeeze plays. But this is almost the opposite of a squeeze play, if that makes any sense. All right. So not quite, but almost. So what this is, and what I believe is going on this chart right now, and we will find out within a couple of days, most likely 2 or 3 trading days at most, if I am correct. What we're probably going to see is a rhino on this market. Again, this is West Texas crude. That's what we're looking at, 4-hour West Texas crude. But again, a chart is a chart. You're going to see this all over the place. All right. So what happens is the market, in fact, I was kind of hoping we would see this on the Bitcoins, but not sure about that. It's not clear if it's going to unfold that way. So we'll see. So what happens here is the market's going in one direction, and then a trend line starts to constrain the highs. Okay, we'll just look at the bullish example, but this would all work in reverse for a bearish setup. So the trend line is pushing down the highs and keeping it from making new highs. Okay, so we've got that trend line here. The next thing you see is you've got this horizontal support and resistance. Now this is very obvious, of course, because we had it back here. I mean, look. Support, 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 and resistance, resistance. All right? So we have this awesome resistance, resistance, support, support. So it's definitely a wedge sort of thing happening here. Now what you will normally see, and again, don't take my word for it, test this for yourself. Go out and have a look at what this looks like. But what you'll normally see with this rhino setup is you will see like a fake out move that looks like it's going to break lower. Okay, so this is an uptrend through and through, but it's an uptrend. You can see the trend line here if you're that kind of trader, right? But this is the fake out move. Now, it might be a long-tailed candle like this one or this one, or a long wiki candle that prints here. But it doesn't have to be. It could just be a big bearish candle that prints, and then the very next candle is a big bullish candle that comes back and takes it out, right? So kind of engulfs. It doesn't have to be a big shadow or anything perfect. It just needs to look like, oh, it's selling off, and then comes right back up. And that's your sign to go. And I like to put my stop loss down below this bad boy, and I let it rip. Now, it usually is going to at least get up to this high here. That's usually, but it'll usually go much further beyond that. If I've got really nice open position ratios and all that, I expect this bad boy to travel, like to get up here and not just take out this high, right? Because what I don't want to see it do is come up here and like box up and make a box. That would be horrible, right? That's a possibility, but what I really want to do is I want open position ratios behind me. I want to know that this is a strong trend. And I want to know when it gets up here to that equal high, it's going to break through it and keep going. So it's basically trend line. It's basically you've got a trend going, which we know. We've got a trend. We've got an uptrend. Maybe our open position ratios are good too. I don't think, yeah, I don't have those. Actually don't have those for you. So, well, yeah, I'll skip that for now. But let's say the open position ratios are good and everything. Then it slowly gets squeezed here, and then it pops. It looks like it's breaking down. It looks like it's the sell, but no, it's actually just a shakeout. Clears out all those orders down below these lows, below these candles, and takes out all those orders, and then boom, it goes off to the races. It is a lovely setup, and I would encourage you to test it if this makes sense to you. Okay, this is probably not what I was talking about. It's not quite the setup here, like this thing right here that you can see, this plus this. It's not quite the right thing because see, it broke down here, okay, and then it did come back up, but this bullish candle wasn't bullish enough. It didn't quite get up into this, to where the big bearish candle was. It didn't get back up above the flat horizontal level. And not only that, but I'm not sure, is this the highest? Is this the highest? I guess it is. Okay. So the highest high is over here to the left. I wasn't sure if this high was high or whatever. So it's not the perfect wedge here or whatever, but this is a really cool, and it did eventually with this Kangaroo Tail here, it did actually clear out even more orders that were down here and here, and then it did rocket up and go higher. But that was a tricky one because it didn't really follow the perfect pattern. But I would love for you to test this for yourself. I don't want you to take my word for it, but you will see these all over the place. In fact, if you guys want to look at any charts, let me know. But I think what we'll do right now, we'll have a look. There's a little shoulder, head and shoulder there. If we can see any of these types of setups on the 1 hour chart. So that's what I'm going to do now. I'm just going to have a look at the 1 hour charts. And if you guys have any questions, any current, like any markets you want to have a look at, I'm happy to do so right now. But let's scroll through here while you guys are typing in your questions, and I'll have a look and see if we can find any of these. This was a double top. Obviously, you could see that there was going to be divergence. If anyone's looking at indicators, they're going to have divergence here on these. Talked about this one yesterday with my forum that we saw it. I did the video when it was here, when this candle just printed is when I did the video yesterday for our group, and we talked about how this was probably going to be divergence. It was probably going to retrace a bit here on the next candle. It did, and it sold off. So that was good for about 2R for anyone that saw that. Let's see here. Let's zoom in a bit so we can see. Yeah, it's no good. That kiwi is no good. Now, some people might see this and go, hey, Walter, is this the thing you're talking about? Like you've got the, it looks like you got the trend line here and you got the flat area here. And the answer is no. The reason we would say no is because this is a downward trending market. So this is a completely different setup, right? This is more along the lines of a squeeze play than the rhino reversal thing. So if we're looking at a downward trending market, what you want to see is the opposite. You want to see the flat, the horizontal support resistance, and then you want to see the price is getting squeezed like this, right? Squeezed up to here, and then you get the fake out, breakout to the upside here, and then it falls. So this would not qualify. Just want to make sure that everyone's clear on that we would see something. This is a completely different type of a setup. Yeah, I mean, the Swissy chart is, the Swissy numbers are bearish. The chart is not as bearish as you would expect given the numbers, but sometimes that happens where the markets. I would like to sell the Swissy up here, like a big shadow or a Kangaroo Tail up here would make a lot of sense to me. But I would kind of consider it stuck in this box right now. Yeah. This potentially could be the rhino thing here, like we were talking about. Like that could be going on here. We have something like this potentially. However, we don't know. We don't know. It may mess around here for a while, tighten up, and then do the break higher, the fake out down here and the break higher. So, and the numbers are brilliant for the yen right now, as you can see. Where are my numbers? Here. 71% of our traders are short. So it's a very bullish, a very blue market on dollar yen. So this would be one that I would love to see this sort of thing happen for sure. So there's one. So I just wanted, it's so easy to cherry pick when people do webinars and say, oh, look at this, it's so great. I just thought that it would be fun to look at the live markets, see if we can potentially see any of these happening. Now, Aussie yen is interesting because it was Yesterday it was much closer to 70%. It's pulled back a bit. I think yesterday I saw it at 68. We're now at 65, so not quite at 70. And some people are going to squint their eyes and say, "Well, it's a shoulder, head and shoulder, maybe," but we're not clear on that just yet. So we'll see. One thing that could happen here is that we see the break, like this ends up being a box, and then we break above the box, and then it comes back down and bounces off the box last kiss down and gives us a last kiss kangaroo tail or a last kiss big shadow to buy there, right? So that would be a reversal off the box. A lot of these looking somewhat head and shouldery. But this one, this one I'm not, well, some people are going to look at this and say it's a big shadow that doesn't actually have a higher high, and it doesn't have space, right? If this candle, if you could cut and paste it and had a slightly higher high, you could paste it up here, it would be a much, much better setup to me than what we are stuck with here. Aussie CAD has been bearish for a while, the last couple of days. But this chart, the 1 hour chart, no bueno, right? No bueno because why? Because we're consolidating. We're just consolidating. So it would be lovely to get the signal, to get the bearish signal, but right now, well, you know, a big shadow or a kangaroo tail up here, that'd be pretty good. If I got a big shadow or a kangaroo tail up around 92 to 92.10 up in this area, that'd be great. That'd be really great. Alternatively, I could see it break down below this 91.37 level, and then it falls lower, comes back up and gives me a big shadow or a kangaroo tail right there, and then that's my ticket, right? That's my ticket right there to sell. Okay, CAD Swiss. We talked about the CAD Swiss. The CAD Swiss is trending towards being bullish. It's quite close to 70%. It's not quite there yet. Potentially, this could be what we were talking about, the rhino fake out sort of thing. We've got this nice support level right here on these highs. So it could be squeezing down here. And then we get the little fake out rhino, boom, right there, and then it goes. So that's definitely one worth watching. I have been watching that one. Same thing here with the CAD yen. Again, we've got the floor here. We've got the tightening up, and then this is a moving average thing. I'll put this one on. There's a kangaroo tail that does not have the open and the close inside the previous candle's range because it was such a gappy move there. Again, this one doesn't have the open and close in the previous candle's range. Yeah, probably stay away from that one for now. Looks better on the higher time frame because I think it may break out, pull back, and give possibly that would be a great setup if it did something like that. Our Euro Aussie could possibly be giving us the reverse rhino. So let's just clarify this by putting the lines in. You have this. You have this one. Aha. Look at that. So this could be, not sure, but could be a rhino sell. Somewhere over here we get the breakout and then the reversal move, and that's the signal to sell. What's nice about these is you have this really clear target down here. Now I like to hold them for, like, I split it up. I mostly split up my trades where I would take some profit here, and then the last half of the position I would use a trailing exit to see how far it can go, right? I mentioned I'm already in the EuroCAD trade. Did I mention that? I'm already in the renew zone. Let's not talk about that one. Here's one. Well, I would say this is a box, something like this, and I would wait for it to break out of the box. This looks almost more like a traditional squeeze play. I don't think that the numbers are bullish, but they have been close lately on the New Zealand yen. No, they're not now. All right, the Singapore dollar right here. Let's look at this 1 hour chart. Yeah, I don't know. This is, you know, these sorts of charts I like to nibble on the edges. If I have a neutral, and I do believe this is neutral, Singapore dollar numbers are, no, bearish, slightly bearish. Not red, but trending towards red. So I wouldn't be buying at the bottom of this box. I would just be selling up at the top. So I would not buy here. I would potentially take a pinch, like a sell. If it breaks lower, comes back up, gives me a trendy a kangaroo tail or a big shadow. I would sell off of that, right? Sell possibly all the way down to here, but I would not be buying on this floor. I would also be happy to sell up here where we had this reversal. I think that's a little tiny baby kangaroo tail. Unfortunately, it didn't have a long tail. Yeah, too small. And the other one as well. So we had one there and then one there. That was almost a big shadow. So close, right? So close right there. So yeah, so this would be one where I would sell up at the top, but I would not, or sell on a break through the floor, but I would not buy down there. Yeah, I got nothing to say about the Euro Singapore. Aussie Singapore. Boy, a lot of these are, you know, you look at a lot of these and you can't help but go, shoulder, head, and shoulder. Are they going to make the last shoulder? That seems to be a big question right now. This was a big shadow right here. This is actually a really cool point because I didn't. Now, all right, so let's talk about this because I find this sort of setup fascinating. One thing about okay, so the market's been going down, right? And the numbers have actually been bearish for a while. They were bullish for a while, and then they flipped and went bearish, almost like in like a day. They went from 70% short to being very bullish to being 70% long or more, being very bearish. And so what's interesting about the New Zealand CAD to me is that this was showing a normal bearish flag, right? Chart's been going down. It just had a pullback here. And then the big shadow actually gave you a sign that this was the end of this pullback move. Now, it wasn't a perfect big shadow because why? It didn't have any space because this candle right here had a higher high than your previous candle in the big shadow. So the two candle big shadow formation, unfortunately, although it was brilliant, it didn't have space. But remember, when I see a market marching like this against the trend, remember, we had bearish numbers when this whole thing formed. I like the idea of finding that ultimate ending candle, like the end of that retracement move. So if there's a long tail right here or a big shadow right there, whatever, I'm looking for that spot on the chart where it's like, okay, this is the end of the retracement move. And this is clearly that sign. That's why on the Euro Pound, I was thinking that yesterday. When the Euro Pound had this candle here, I was thinking that this was the end of this little bearish flag pullback, right? But it wasn't. It wasn't, and we've sat now for 2.5 candles, so it wasn't quite there. So I just wanted to point that out, that sometimes what you'll get is a signal that's not quite as good, but because it's of the placement, it's actually, it could be worthy of a trade. Now, I didn't actually see that one, but and I don't trade a lot of 1 hour charts. I was looking at the Aussie 1 hour yesterday, but that was unusual. So one place where it would be a really great spot for a reversal on the Pound Aussie. And now remember, Pound Aussie numbers are neutral, right? Let's have a double check. Yeah, 46.54. So we've got neutral numbers. So what that means for me is it's going to be bouncing off support and resistance. So I'm thinking, when I see this, I'm thinking it's going to magnet. There's a magnet. It's going to attract it to this level. And then once it gets there, if it gives me good price action, it gives me a nice big shadow, a nice long tail, kangaroo tail, something like that, then I can sell at 86.10, 86.05 on that reversal right there. This is an awesome spot for reversal because look at all these candles that have bounced here, right? Oh, I think we are, I think we've hit the end of the road here, guys. I just realized, sorry, I've been yapping on. But I just wanted to give you a flavor of what big shadow, rhino, reversal, and kangaroo tail trades might look like. And hopefully that helps. I really appreciate it. And thanks to all of you watching the recording too. I know most of you are watching the recording. Thanks for spending time here. I wish you very happy trading. And as they say, you'll find the recorded webinar later on. So thanks. Thanks, guys. Have a wonderful day. We'll see you next time. See you next month. See ya. Bye. Ciao.